Hello, everyone. I think the biggest driver of autonomous technology is we think it'll make transportation really cheap. So we estimate that an autonomous taxi would cost about 25 cents per mile or about 60 Aussie cents per kilometer. So that's roughly half of the cost that it costs you to div your personal car, and it's also much cheaper than a taxi, of course. So we think this is going to expand the ride-hailing market and give a lot of people access to really cheap point-to-point travel that don't have it today, particularly in markets like China. Of course, they'll be much safer. We also think autonomous cars will reduce accident rates by about 80%. We think most of urban driving will go autonomous, and that's where the majority of miles occur today in urban markets. So you can think of it as a car household becoming a on-a-car household, a on-a-car household moving to zero cars. So if you live in a city, chances are you won't need to own a car, and you could just take an autonomous every day to work if you wanted to. Today, we'll be exploring Tesla's latest earnings call, where they showcase their future ride-hailing app. We'll talk about the huge potential of their robo-cab service and what it means that China has approved Tesla's full self-driving technology. We'll also talk about the rumors that Tesla might rent their SSD technology to other car companies. Tasha Keeney will give her professional opinion on legal problems and how they affect the introduction of self-driving cars. Stay tuned as we reveal Tesla's plans for making their robo-cab service bigger. The self-driving cars are efficient and profitable, and a lot more. If you're a Tesla fan or investor, you won't want to miss this. Make sure to like the video, listen to Tesla stock news, and hit the notification bell. Ring the bell so you never miss a message. Let's start the most recent news call. Tesla showed off a prototype of their upcoming ride-hailing app. This app will make it easy for people to book and pay for rides in Tesla's self-driving cars, giving us a sneak peek at what the experience might be like. The app has a sleek, easy-to-use interface that is meant to make booking easy by showing expected arrival times in real time and price information that is clear. Analysts say that Tesla's robo-cab service could bring in about 66% of the company's market value by 2027. This is proof of how important self-driving cars are to Tesla's future growth and profits. The fact that this service could be linked to such a large part of Tesla's value shows how drastically it could change the company. There are big financial effects. Self-driving cars could save a lot of money and make a lot of money without the need for human drivers. Tesla could find new ways to make money, like offering membership services for extra features, which would greatly lower the company's operating costs. Pricing methods that change based on demand and ways to make money from data. Also, the success of Tesla's robo-cab service could lead to a bigger change in the auto. Tasha Keeney is famous for her in-depth research and forward-thinking analysis in the field of self-driving cars. She keeps a close eye on Tesla's progress and market strategies, and she's here to share her predictions and thoughts on the future of Tesla's cyber taxi network and their flexible approach to autonomy. Tasha says that robo-taxis could make a lot of money, withstanding double-digit running profits per car every year. This shows how profitable self-driving ride-hailing could be once it solves some major problems. Getting full liberty is the hardest thing. Tesla needs to make sure that their cars can handle a lot of different situations without any help from a person. To do this, they need to solve a lot of corner cases so that the cars don't need a driver at all. Regulatory challenges are another big part of handling the complicated and very legal landscapes are very important for the success of self-driving cars in some places like California, where safety and data privacy are very important and laws are very strict. The strict rules in California include strict testing standards, detailed reports of disengagements where a human driver has to take control, and full safety assessments. These rules are meant to make sure that self-driving cars can't hurt anyone on public roads, but they make it very hard for companies to use their technologies. Even with these problems, the rules for self-driving cars tend to favor technical progress over bureaucratic delays. This is good news for companies that are pushing the limits of self-driving cars because it shows that regulators are willing to back innovation. Regulators are becoming more aware of the possible benefits of self-driving cars, like lowering the number of accidents caused by human error, getting more cars moving and lowering pollution. This optimistic view helps to create an environment that is good for developing and using self-driving technologies, but the Tesla journey doesn't end there. Every day brings new and exciting discoveries, with ups and downs that make it even more interesting. This is how Tesla keeps pulling more and more investors down its rabbit hole. But do you know who else shares Tesla's optimism? That would be today's sponsor, Seeking Alpha. When it comes to Tesla's impressive growth, it's not just about watching from the sidelines for Tesla bulls and people who are always on the lookout for the next stock market gem. Seeking Alpha has everything you need to know about Tesla. Tesla's stock price goals, Tesla's new ideas, and everything Elon Musk avoids the negative talk about Tesla in the mainstream media. Seeking Alpha has the most news about Tesla than any other site on the web. If you click on one of the affiliate links in the description and then buy something, our channel may get a small fee. Thanks for your support. Tasha Keeney also said that California's strict rules mean that companies have to be very well prepared to meet these high standards. For Tesla and other companies like it, this means spending a lot of money on safety features. A lot of testing and following the rules for giving thorough reports. Being able to operate successfully in California can show that a company can meet some of the strictest standards in the business and set a standard for broad adoption. A little more than half of the U.S. states have laws that make it easier for self-driving cars to be made and used. These states provide a better setting for growth, with rules that make testing and launching easier while still making sure safety. Because of their less strict rules, states like Arizona and Nevada have become popular places for companies that make self-driving cars to test them. These states usually have clear rules and easy ways to get the permits they need to do tests on public roads. Many states' legal environments are friendly to new ideas and growth in the self-driving car industry. Companies can take advantage of these good conditions to improve their technologies and gather important data they need to make their systems better. Also, because regulations are different in each state, companies can try their cars in a variety of situations and conditions, which makes their autonomous systems stronger and more reliable. Self-driving cars could be more efficient than cars driven by people. This could mean lower operating costs and higher profits for businesses that use these cars as robo-taxis. However, there are concerns about insurance costs and how to charge self-driving cars that are used as robo-taxis.